How do we look?
You look good? You look like you're twinning too much, or? Huh? You sure about that? All right. How you doing?
Good.
You doing all right?
Yeah.
Day going all right so far?
Can't complain.
Good.
Can't complain. Doing well.
Good. It's been a minute since you've been out. I think our last podcast together was probably October or something. So we're getting back on the swing of things. I think it was even earlier than that. It's probably like June, July.
Yeah, been a little
anyway,
while.
Yeah, I know. We got to get back on it. So it happens when you get busy, right? You start pushing things off and stop doing it. So for people that are listening right now, it's I'm Nick Caton, and this is Communicating. How did we get here? And then my always long-time returning guest, Jonas, introduce yourself.
Hi, I'm Jonas Pritchard with Generations Home Loans.
Right on. And so Jonas and myself, we both work. I work for PMZ, and Jonas is obviously works for Generation Home Loans. And I love getting him on because he can kind of talk about what's going on with lending and what we see in the market and what's going on in the market. And we're at the beginning of 2026, and with everything that's been going on locally in national news, like we were sharing with the group about national news, how in the East they're talking about 20-30% drops. Locally we're kind of just stable out here. Things have been going actually pretty healthy. Do you agree?
Yeah, no, I think people say, real estate's local. And it really is because, there's different markets. We have our market here in the Central Valley. We have markets in the Bay Area. And then you can go to, Dallas, Texas, or places in Florida or the Northeast. Each of these are going to be different. Some of them are experiencing a lot pickup in inventory. There's a lot more houses on the market. But here, we've actually in the last few months seen a decline in our inventory. So we were up over, I think, in the 95361. At one time, we had over 100 listings.
Yeah.
And now I think last time you checked, was it on Tuesday? We were down to
52 in Oakdale.
Yeah, 52. So our market right now, if we take a current snapshot, looks pretty healthy. I actually would like more inventory locally for myself on the lending side. I'd like to see that inventory actually raise a little bit. But I think that locally our market seems to be healthy and doing really well. Going into that, and we're more of a buyer's market, seller's market. What are we at right now? I'm seeing it as more of a seller's market, trying to capitalize on the lack of inventory right now. But at the same sense, buyers are being very picky. You feel the same way? Yeah, I think we are seeing, while we're in escrow, if inspections or things or items come up, it seems like for buyers it's a bigger deal, and people are wanting, the market, it seems like it's kind of seller. Sometimes it mixes to balance, but right now it's kind of looks like leaning back towards seller. But I think as we are seeing people be more particular, calling out things on inspections, wanting things of homeowners that are selling homes, just so you're aware that if things are coming up, they're wanting them addressed. So, but generally we're not seeing escrows a lot, or at least me, I'm not seeing a lot of my escrows fall out, and generally people come together and agree on a solution.
So what are the 2026 housing forecasts looking like right now? We talk about it privately all the time. But,
yeah.
Now we're gonna put it to what. Now it's on film, so now we got to kind of hold to it. But just as an honest forecast, what do you think? Where do you think we're going to be going in 2026 right now?
I think. Well, what was NAR had a pretty aggressive
14%.
Yeah, 14%. Now, it could very well happen. I think me and you are more around 4 to 5. I'll make my prediction. I think we're maybe 4 or 5% appreciation.
I'll hit the average. Let's go for the average. That's the local average. 6 to 8. Yeah, that sounds good. So that's where I think. I'm. Right now, I probably believe we might see that traditional 3-5% appreciation. But who knows? The markets can change quickly. But that's what I anticipate. I think rates are getting into a better range. There's a lot of data that has to come into effect that can affect the interest rates that we as consumers pay. The experts are saying that they still think there's going to be at least 2 drops to the Fed's rate, which is different than a 30-year fixed rate. We'll see.
But if they do that what that does is that puts pressure on longer-term rates, and they tend to follow in stride. So I still think
if we're right now in the 6%, low sixes, actually, high fives, low sixes, depending on your your credit and how much money you're putting down and the type of loan product you do. But I could see, like, on a conventional, just one product, 30-year fixes. I mean, I do see us probably in the new year, hopefully being somewhere in the high fives, mid fives, to be determined. But I think once we get in that range, that's historically that's a not a bad range for us to be in for interest rates.
Do you think people are going to adapt quite quickly to if things change, if we get a sudden change like that? And when I mean sudden change, you're talking just another tick underneath 5. It's 5.9 right now, right? I mean, they tick underneath there. See, it hits just above 5.7, 5.8 like that. Do you think people will be adapting into that or jumping into the market, or do you think they'll still be just kind of waiting and see how things go?
I think you're going to have some people that'll always wait. I mean, no matter when, I've done this for 25 years, and I don't care what market we've been in. There's always people that say, "Hey, it's going to go lower. Rates are going to go lower. Prices are going to go lower." I mean, even in 2010, 2011, I had people really debating whether they should buy or not, and I'm like, I think this is a great time to buy, and some of them waited, which I think was to their detriment. So, I think for most. I think as rates go into that range, I think what it's going to do is, as we're in this range, what it does is it makes just the affordability factor. It really helps a lot of buyers that are trying to get into the market because it is such an expense, especially when the rates were, at one time around 7%. Just that, we've basically gone down about 1% from those highs. We're averaging around the 6% range. So that would actually allow you, for the same payment, to buy 10% more of a house. Mm-hmm. So if we were at 500,000, a 1% drop in interest rates should translate into you being able to qualify more likely, in the $550,000 range. So yes, it makes a huge difference. So if you're on the fence, if you're thinking about this, that's what we're here for. Free consultations. You can give me a call. I can work up different scenarios based on your profile and let you know exactly where I think type of loans you would have, the down payment, and then also what your monthly payment would be.
That segues into the next question perfectly. What are the what programs are getting most traction right now? You see?
Okay, so we always have like the big three, which is conventional, FHA, VA. Those are always going to be our main book of business, our main products. But, and this is actually good because I was thinking about this before we talked. A lot of people don't understand the process, so that's why even if you're wanting to look maybe in 4 or 5 months, it's very good to kind of have a consultation with the realtor and a loan officer even prior. So that way we can just look at things, look at your credit, tell you where you are, and then you have an idea of, okay, I may not be ready at this moment, but in a few months, I'm going to be ready to, I want to buy a home. So I think it's good for us to kind of do an initial review, even if you're thinking about, doing something down the line. What was your original question?
No, you're fine. What programs do you think are taking most traction right now?
So I'm gonna segue into that. So those programs are our main programs. Now, a lot of people don't understand why we have different programs because different programs are going to have different standards. So basically, the big threes are going to be conventional. Jumbo sometimes sneaks into. We do jumbo loans, which is a loan over a certain loan value, but what a lot of people don't understand, and if you're watching this, is we have, for first-time home buyers, we have down payment assistance loan programs. We can actually get a second to help pay closing costs, to help pay down payments. A lot of people don't know that those are options and those are available to people. We have, especially for self-employed people, they may say, well, I do my taxes a certain way. Well, they have alternative documentation where we can maybe look at 12-month bank statements or different types of products. We even have products that delve into asset depreciation, which means I don't make a lot of money monthly. And this is usually more retired people, but I have $1 million in a brokerage account. Well, I can use that $1 million as a form of repayment because we can use the asset depletion as a form of adding income to the borrower. So I know I'm getting into the weeds and stuff, but basically what I'm telling you is people don't understand. There's a lot of loan programs out there available to people. So if you just don't think, hey, my box is different, or I don't think I can get a loan based on on what I'm looking at, I would definitely reach out to someone, because you'll be surprised. There's a lot of people who thought they otherwise wouldn't be able to get a loan, that we have programs available that might be able to get you into housing.
So a lot of buying credit, a lot of credits, a lot of buy downs. Those are still really active, still going on. A lot of the loans you're seeing right now.
Yeah,
still.
yeah. A lot of them, $5,000, $10,000 credits aren't out of the norm. I've seen some higher. But generally, I'm seeing most of my credits. And what a credit is so we can understand that if you're not really if you're watching this and you're not in real estate, is people don't know also that the seller of a property can actually give you credits for not your down payment, but for things like closing costs, prepaids, and stuff like that. So they, in a sense, can get you, if the seller says, I'm going to give you a $10,000 credit towards your closing costs, then essentially that's dollar for dollar, and that means you would have to come in with $10,000 less to secure a home.
That's right. You're putting $10,000 in your back pocket, basically.
And then if you're a first-time home buyer, and I can look at doing down payment assistance in conjunction with a seller credit, I think you'd be really surprised how cheaply some individuals are able to get into homes.
Yeah. Real quick, what's the biggest disconnect between buyers and reality right now? That's a good one.
Oh wow, that's a really.
I mean, and when where that's leading to is okay. A couple. What I mean by disconnect, I think, is the action that the realization of how soon should I be talking to a professional. The other thing too is I think we see it as loan. I think it's always loan amounts. Or I didn't think my payment was going to be that big. When they forget about taxes, they forget about insurance. Insurance is a big thing, especially in the last 3 years. Insurance has been something that's really kind of taken over a lot of. I think put a lot of stress on you specifically because it's a go no go for some of these loans that you've been processing. Right? I mean, a lot of these people they be able to afford that, but I think that the biggest disconnect right now between a lot of buyers and really what's going on is how competitive things are still. I mean, if there is we call it like a cream puff coming on the market, and you are looking for something specific, should you be fully underwritten before you're even getting going on to something like that? If you're, especially if you're sitting on the sidelines a little bit and waiting for that perfect thing. I mean, that's kind of where I'm getting at, the disconnect with reality. Like, just because you're putting your bid in or making an offer doesn't mean that you're necessarily going to be the seller still needs to sign it. There still needs to be things to be happening, even if you are in a little bit of seller's market.
And I think if you're out there and you're interested in buying a home, 100% what I'm going to do, unless you're paying all cash, you're going to need to talk to a lender at some point because you're going to need financing. So even if I pre-approve people and then they haven't even bought for 6 months or a year later. But they did the smart thing is that they came in, I looked at their credit, I looked at their assets, I looked at their income, and I said, here's where we are right now, or maybe we're not even in a spot right now where we can buy a home, but then we can direct them to say, hey, if we do this, this, and this, here's what we can do to get you into a home. And we put them on a 6-month plan, or maybe it's something with credit or something like that we need to work, that they need to work on. So it's good, because I've had people pull credit and wanting to buy a house, but yet something that appears on their credit report. Now, that could be theirs, or they don't remember it, or something that was forgotten. But now, all of a sudden, well, I can't give you a pre-approval letter, and I know you love this house, and this is your dream house. Now, if they would have came maybe a month earlier, we would have gotten any particulars taken care of.
Yeah.
Now, where we had everything wrapped up, we know that we have, kind of our T's crossed, our I's dotted. And now with confidence, you're out there looking for homes, and you know exactly where you are on the financial side.
So if I'm a first-time home buyer, is 2026 the year to buy?
Oh, I think it's for me personally, with inflation and how the dollar depreciates, I don't see. I mean, honestly, is there a bad time? I think there are better times, but I think that is as a long-term goal. What wealthy people do is they invest in appreciating assets. That's how they gain their wealth, through stocks that they know will appreciate, through real estate, through investments in businesses. So a property to me is an investment in yourself.
Right.
And if you're looking to do things short term, you might have to really think about this because, the market can change. But if most homes are, for most individuals, a long-term investment, and you have to live somewhere. It's quality of life for your family. It's an appreciating asset. There are some situations where it may be not a good time to buy, but I think for the majority of people, I mean, even if you bought 5 years ago, some people were saying don't buy 5 years ago. Well, homes have appreciated tremendously even since 2020.
Yeah.
So, historically, in Stanislaus County, we've seen appreciation, approximately, I think, if I remember correctly, about 4.7% over 60 years. Mm-hmm. That's the average appreciation of homes in Stanislaus County. So I want to be on that. I believe in home ownership, and I've owned a home since I was 22 years old. So, I definitely think it's good to either start the process or be in a position to, if you're able to buy at home. I think it's important.
It's like you said, it's a key asset in a lot of people's wealth portfolio. Is owning your own home.
Real estate and investment properties. Eventually, you can rent that house out and buy another one.
Yeah, and we run into all kinds of different scenarios with different people and in different situations of life and where they're at in life and everything else. But I think that it's important that you have some type of stability, and that's the first part of stability is owning your own home, right? It's something that you're going to be paying yourself out back. You can always, what do they say? You can always marry the house but date the rate, right?
Yeah.
You can always be doing that.
And I think if you want a form of rent control, you buy a house because you know that forever that payment's not going to change. There may be some small changes to taxes and insurance, but hey, you pretty much know that you own that house, and as long as you're making those payments, you can live there forever.
Yeah. What income level right now do you think is realistically buying for an entry-level home? Say you're in Oakdale.
Well, I think household income, and it depends on your debts. So that's why it's hard to say.
Go.
Yeah, because you could be looking at, if I have somebody who makes the same amount and one person has $1,000 car payment, what we look at is something called the DTI, so that's debt to income ratio. So I'm looking at the house, certain debts on your credit report and whatnot, and we're seeing that debt, those debts along with the home can only take up a certain percentage of your income. So that's one thing that we're looking at. So one person, I can say exact same income, but I can say, well, you're not qualified for this sales price. I can have another individual that comes in exact same income, but I'm able to qualify them for a higher purchase price because they don't have an $1,000 car payment. So I always think it's good to call no matter what it is. No matter what your income is or where you're at, it's always if you want a free consultation to talk and go over the loan process. So that's something that I definitely do pretty much every week.
Yeah, and it's funny because we sat down and we talk about this is about the move up buyers. So now you're just talking to move up. You have to buy and sell simultaneously. What does that look like? And that is a sit down talk conversation with an agent and also a mortgage lender and understanding how that operation all works because we're going to see more and more of that, I think, these next few years as people are transitioning from that 2020 market. We have the average, the national average for people moving is 5 to 7 years. Here we are. If you bought in 2020, it's 2026, so we're right in the middle of that. So people are changing. Either they're downsizing or they're going to upsize or do a few things like that. So there might be some change in there, and that's where I think I know we talk about it in our sales meetings. That's like a target market for us. Try to get into try to talk to people that are thinking about doing that. So if you're in that market of thinking you're going to hate one way or the other, that's something you need to come down, make an appointment, sit down, talk to your mortgage lender and also your realtor together and come up with a plan because you miss at 100% of the things that you don't aim at. If there's no plan or nothing in place, you're going to miss it every single time. The other thing too is if you have a ton of equity into the property, there's creative ways to be able to pull that equity out, put down either down payment, or if you're paying, you might be able to pay all cash onto another property, move out, be able to sell your home and do that. I'm working with somebody right now that's planning on doing that. Jonas, we did a deal a couple years ago. We did that as well. It's just ideally it's when you're starting to begin into this process of trying to purchase or downsize or do something different here. It's ideal to come in and sit and talk to somebody that has your best interest locally. It's a little easy to do that online. And somebody's talking in Michigan and they're talking to you. They don't know what's going on out here in California, and they have no idea. And because that happens too. Yeah, it's interesting. That you're talking to a lender back in the Midwest, and they have no clue what's going on in the current market out here, what's going on, what's taking on out this way. All right. So quick fire questions. We're going to kind of wrap this up. What's your one word to describe the 2026 housing market right now? What do you think? What's your one word?
I mean, it looks to me to be just more normal. I would say
agree.
normal is a word. It seems like it's becoming more of a traditional market, like we've seen from maybe whatever 2015 to 2019. Kind of just more and that's my opinion.
I got scolded yesterday for using more of a seasonal market, and I felt seasonal was right, but I think more traditional, like you said, and I think is more what we're going to
kind
go
of a
into.
more normal state.
A lot of normal traditional.
Hopefully,
market.
we don't have a lot of fluctuation in rates, or if there are, they're to the down.
and well, that and we don't want to see everybody's we want to see the rates go down. No, you really don't, because that means things are going bad somewhere else. And that so. We want to see this nice fluctuation or stability.
Stability is the key that helps us to have slightly lowering stability. Is great for the market.
Biggest buyer myth you've heard this week? What's the biggest buyer myth you heard this week?
Generally, with buyers, I think they don't understand the loan process. So some of them are still in the impression that if I don't have 780 FICO and 20% down, and I'm making six figures a month, there's no way I can buy a house. Well, there's a lot of people that I'm helping get into homes that don't fit all those boxes. So
especially like we talked about that first time home buyer. Where is that price point for them to be able to purchase? And you don't even look at that. You need to look at what you're paying out, right?
Mm-hmm.
I mean, your debt to owe.
Yep.
What that looks like,
Yeah. So that's where I come in.
You nailed that on that. That's really good.
Or sometimes if we're not ready at the moment, then we look at even just as simple as, hey, can we pay some debt down, and then relook at this once that debt's paid down, so we can get to a higher purchase price.
Yeah. Best advice you have given a client in the last 2 weeks.
Oh, in the last 2 weeks.
Yeah, it's 2026, so we're only like 2 weeks in.
Well, I don't want to get into it too much, but I thinking I think the advice I usually give, I think, is just on trying to be very upfront with people even before they find houses, to show them, and this is where being local, if we want to rope it back into local. So we have clients that are looking at in the Miwok area. Well, if you're from around here and you're a loan officer, you're going to know that the insurance rates are tremendously different in Miwok than they are in Oakdale. And if you're quoting somebody something as small as Oakdale insurance rates at $140 a month or whatnot, and we're actually looking at $500 or $600 a month for home insurance, just letting people know in advance good information so they can make solid choices and they're not surprises at the end. So that's what I like to do, is be very thorough to help people understand what I'm seeing and why we do things the way we do. And if you're looking in certain areas, having the knowledge to say, okay, I already know exactly now I'm going to have to change my insurance premium. Make sure we qualify based on higher insurance, and then also make sure the buyer is well aware of that, so we don't get into contract and they say, oh, wait, no one told me that there's going to be another $300 or $400 a month for fire insurance, and the whole deal falls apart. So I think that's my advice, is trying to educate people to no decisions they're making up front.
Again, it's that lender out in Michigan telling you, hey, you can be doing this, and this.
Yeah, I've seen their insurance be $80 a month. Because they just don't know what our area. It's local. I mean, it can change from here to Sonora to Miwok. So, they ask me, well, why is your payment so much more? And I say, well, can you send me their estimate? I look it over and I say, well, one, their taxes aren't right. They're using Arizona taxes. They're using Arizona home insurance. Mm-hmm. Your home insurance isn't going to be $65 a month, and your taxes aren't going to be $123. So the difference that you're seeing is here. So again, that's an educational point, and that's why it's good to talk to, I think, people that are local, know what they're doing, know the market, because I think it's just another layer that helps fend off perhaps potential problems down the road.
Last question: what are you most excited about in 2026? What are you most excited about right
On the market?
now? Or personal too?
Oh, well, I got engaged, so very happy.
Congratulations! Right on.
So I will be getting married, so I'm happy about that. And I think this year is going to be a good market. I think it's going to be a healthy, just a normal market, especially in our area, in Stanislaus, San Joaquin, Tuolumne County. I think I hope that it just becomes a more stable, normalized market, and we keep on making progress.
You're talking to two guys that have been doing this for 20 years, and you want it. And we just got through some of the last 2 years, 2.5 years, have probably been some of the roughest points in real estate right now. We've been through. We just got through this. So we tell our agents that are here, you get through this, you're the top, you're the top 30% of everybody right now, and you're still surviving. You're still doing things that you need to be doing, and you're still making money. You're still in business. That's your head's above water. All right. I saw a stat today. There were over a couple million realtors did not sell a single home last year.
Yeah,
it was like 2 million, and well, that's kind of the signs of the times. Like I said, and last year was one of my better years. And some years you crushed all your goals.
I got my goals. Yeah.
Yeah, and I hit mine, and then I set some new goals for myself, and I didn't get them, but I was close. But this year, as it's 2026, is looking bright for a lot of us. Our office meetings have been very, very upbeat, and everybody's looking very. I mean, we start sharing things that are coming on, and I think February and March is going to be a telltale sign of what the rest of the year is going to hold. Yeah. I really do. So, Anyway, Jonas, thanks. Always thank you.
Thank you, Nick. Appreciate it.
Oh yeah, always thank you. Congratulations to you and Dina again.
Oh, thank you.
I love it, man.
Thank you.
But anyway, hope you find this interesting. And if you have any more information or want some more information, about loans or any home lending, Jonas, throw out your contact.
So if you want to give me a call anytime, my number is 209-402-1305. Even if it's just questions or you want to get a little bit more insight into the real estate lending world, feel free to give me a call.
You can always reach me at 209-380-7083. I hope you hear this well. Make it a great week. Okay. Was this even on?